Welcome. Disappointing they've taken away the bell, but never mind. Well, thank you so much for joining. It's already been an incredibly busy finance week here in Abu Dhabi. The topic of this session is keeping the flywheel spinning. How does traditional finance help fuel next generation products? I'm Konstantinos Adamos. I will be moderating this session. I'm joined by a fantastic panel of speakers. Welcome. If I can ask you to introduce yourselves and your organizations before we jump right in.
Sure, I take the lead. So my name is Yasmina Kazitani, and I'm the president of the Blockchain Game Alliance. We have over 600 members across the world in the ecosystem of gaming, from fashion, music, protocols. And we are trying to defend and support the games as a whole, from Web 2, Web 3, Web, any number that comes from the innovation side of it.
Yeah, sure. Thank you for having me. I'm Back Kim. I'm a general partner at Hash. We've been an early stage global venture fund for blockchain investments since 2017. We recently opened office right here in ADGM, so very excited to be part of the Finance Week.
Hi, my name is Ambre. I'm the CEO of Kaiko, and we're a global data analytics and data infrastructure company in digital assets.
Hi, I'm Marek from Blockchain World. We have started business from 2018. We provide crypto exchange service, including cash and margin trading, and also we provide Web3 wallet too. That's it.
Thank you. Beck, you're a VC very active in this space. Where are you placing your highest conviction bets in the embedded finance stack?
For sure. 2025 was a pivotal year for embedded finance and also general institutional adoption. We've seen big progress in regulation, but also the general asset size growth within the blockchain on-chain. As an investor, we see across the stack, and we've been seeing a lot of the progress, especially around RWAs, real-world assets, on-chain finance. But not only that, we've been seeing a lot of adoption through the institutional companies using wallets or using even DeFi protocols to be part of their service to serve clients and end users. So we've been quite excited about general bottom-up stack that we've been seeing, whereas compared to the top-down enterprise stack that we've been seeing more in the TradFi space.
Thank you. Amber, in traditional finance, data is a trust layer to inform decision making. What are the biggest blind spots you see in crypto, and how do we solve for that problem?
I think the data question in crypto is extremely interesting, specifically when you think around tokenization and kind of bringing capital markets on blockchains, which is a big trend this year. You just said it, right? Data is a very important reference point in traditional finance. In a world of blockchain and smart contract execution where we disintermediate the execution of the workflow, meaning that we remove intermediaries, literally, the data that you input into the contract becomes critically more important. And so I think we're going to see an explosion of the value of market data as we think about bringing on traditional financial market data onto blockchain to enable traditional capital market style applications. So data in crypto has always been extremely important. We've been providing for now 11 years price transparency and market microstructure transparency by providing all sorts of financial market data activity on crypto. But now, as we're getting into this world of bringing global markets on chain, we're going to enter another stage of data infrastructure, which is more about bringing IP-protected TradFi market data on chain to enable traditional financial applications. And this is a very important piece of the market infrastructure required on chain to enable capital markets.
Tatsuya, Rakuten Wallet is a huge player in Japan. It's probably a very good example of the embedded finance ecosystem. How has the regulation helped the wallet evolve in time? And what's the situation currently in Japan in terms of regulation?
All right. So Japan is one of the first countries to make a regulation for the crypto exchanges, 2017. Now 2 years a turning point because the regulation will be changed. When I started the crypto business in Japan, it's under the regulation of the Transport the Services Act, but change to the financial the products, and then so we control the under the financial products next year. Then so it means many traditional the financial services like banks and securities are going to enter into the market. Then so we expect the bigger and bigger. And the crypto market is a chance next year. And also taxation will be a change and on the discussions. That kind of situations.
That's very, very interesting. Yasmina, from all the industries that are currently using and slowly turning into embedded finance and DeFi, blockchain gaming has been a pioneer in that space. What lessons can we take from that world and apply them in traditional finance and DeFi?
I would probably start by saying that, yes, the gaming has always been the first step into any innovation across the last 50 years, because gamers are very easy to jump into anything, right, and try them. On the other hand, what we have learned through the last, I would probably say the 5 years, is that DeFi is the best way to create a fractionless, small, let's say, transactions for the players, because usually when you buy one skin, two skins, a sword, and so on and so forth on the traditional platforms, it is very costly and it takes time for people to get money back. When the DeFi applies to the games and to the blockchain, then these fractionless little transactions start being really useful, because it's kind of like instant and also it's cost effective. But on the top of that, what we also seen within the game ecosystem is that the centralized one are letting down the gamers, like the Counter-Strike recent update that kind of devaluate all the digital assets of all the gamers. So it's like you're putting your money in a bank, traditional bank, and then you wake up in the morning and this digital asset is not at the same value, so you lost maybe 50-60%. So the DeFi kind of helped that part of it by retrieving your own asset, and you kind of take them.
Beck, in legacy finance, we see deep infrastructure, we see embedded compliance. This culture has not yet made its way in DeFi. How can we recreate it? And as an investor, I'm sure risk and compliance are very important to you when you make an investment decision. How do we recreate this culture in DeFi?
Yeah, definitely. With the more clarity with the regulation, I think we're seeing more of this adoption happening. But I think the remaining big question is the traditional finance going to be going in a route of becoming fully on-chain finance at the end of the day as a different stack, or DeFi become just another tokenized funds within that fits into traditional finance, which is a very different approach. And we're seeing both approaches happening within the industry, within the traditional finance. As a venture investor, we want to invest in something that disrupts or makes a paradigm shift. So we're investing in a lot of the founders that are building out the solution that could change basically the rail, whether that's stablecoin pay, or whether this is RWA usage, or whether creation of a yield. And what's been really interesting this year is that previous years, a lot of the use cases has been more focused on mechanical usage. What I mean by that is many times institutions think about embedded finance through blockchain. They think of it as a more of a automation, or less fee, more efficiency, or more secure potentially. But now a lot of the clients and the partners we work with are becoming more creative on new business ideation that has different model completely, that doesn't really fit into their existing business model. So I'm quite excited about what will come with the iteration that we've been seeing in the space past 10 years and the next 10 years.
Tatsuya, what have been the biggest breakthroughs in building institutional grade trust for Web3?
Also, Web3, so Japanese governments are to set up the project team of the Web3 and reach the Japanese market. And so still we have to need more use case for the Web3. But so, for example, so stablecoin is one of the key. And then now, so Japanese banks like Mitsubishi and Sumitomo and Mizuho and get together and issue the stablecoin. And so try to create other next generation of the digital ecosystems, which in is of the new Web3 areas, I believe.
We touched on stablecoins. Yasmina, do you see tokenization, in particular stablecoins, as another efficiency play, or is it going to fundamentally reshape the markets, how we treat value and ownership?
Yes, I think that's it's very important to look at the stablecoin as the next edge in terms of the DeFi, because everyone I talk today about crypto or blockchain, they say, oh, it's very volatile, right? But the stable coins, in terms of the games, is the best way because you can peg it against gold, against USD, whatever the currency you want. And basically, it doesn't have this fluctuation or volatility that usually crypto has. And we know that we are working currently with Nexus SNI protocols, and we are trying to embed that because there are two major things that are important with the stablecoin. Is that one thing, it can be played from Japan all the way to LA, very easily, and at the same time you can get your money in and out, which usually takes ages when you're on to crypto or even FX like other currency. And the second part is because stable coins allow this, I would probably say the consistency of the value. That's also a very important part when you're putting your assets somewhere. You don't want them to be devaluated because someone woke up in the morning and something happened and you lose everything, right, guys? So I think that from the stablecoin perspective, we are looking at, it's not just the simple crypto that we see today, but more of a sustainable one for the next economy.
Amber, in what ways do you see DeFi complementing TradeFi, and how would you expect this is going to change over the coming few years?
I think DeFi crypto and DeFi is an incredible innovation, incredible technology. What I think is interesting in the context of traditional finance is that it provided a sandbox environment in some way to prove that blockchain works as a technology, that smart contract works to represent financial contracts, whether it's lending and borrowing protocols, whether it's DEXs, like that we have shown to TradFi using DeFi that you can use smart contracts to do all sorts of financial type activity. So I think that is one angle that I find very interesting, and we're very grateful that we had DeFi as a proof of essentially a very large scale 24/7 proof of concept, which is very powerful. The second thing that I love is DeFi and crypto has provided innovative technologies that is now taken by TradFi. And I'll give a very concrete example, perpetual swaps. Perpetual swaps is a crypto native instrument that was designed for trading crypto. And now we are seeing the emergence of perps DEXs on which you could start listing equity markets. And that, I think, is an incredible proof that crypto didn't just bring the underlying infrastructure and technology, which is what we spoke of the most, but also actual product innovation. And so I think that this merging of crypto and DeFi and TradFi is extremely interesting in the sense that it's going to take time. I don't think we're going to onboard 30 trillions in a year and a half. Like, I think there will be a moment in time where we will see parallel systems existing, and that will take time to merge. But if we do it right, we can actually take the best of both worlds, try to remove the intermediated kind of value chain that we currently have in TradFi, put that on the blockchain rails, and using the great things about DeFi and TradFi without necessarily repeating some of the mistakes of both. And I think this is fascinating. So DeFi is an incredible sandbox environment for TradFi, and now we're bringing on the regulatory clarity, the collateral, the regulated cash leg with regulated stablecoins. Like, we are onboarding onto the chain all of the assets that are required to bring capital markets on chain. And I would argue that the big missing piece of that capital markets on chain infrastructure now is 24/7 real-time data infrastructure that can preserve TradFi data IP accuracy and timeliness? And those are, I think, the interesting questions from a data standpoint when it comes to the challenges of next year.
Yeah, I definitely agree with Embre. I think we're nearing the inflection point where decentralized exchanges volume will surpass centralized exchanges quite quickly, and it's inevitable. And it's already kind of seeing the signs in many regions. For example, in Korea, token trading volume is frequently towering the volume of domestic stock market volumes, and that's happening in many countries around the world, and I'm sure it's going to be happening through the UAE likely as well. So with that, when the market answers and market moves much faster than how products get developed, the Tradify will have to adjust and adapt, and we're already seeing that sign, them giving hints that they're intending to understand, intending to make that part of their rail. But I think a lot of these markets will become so big that this will completely kind of shift how financial market has been designed today. Just looking at the speed too, right? Crypto being 24/7 compared to not Wall Street having closing hours. It's a significant change in how corporates have been operating or how they design the front office, back office. So I think we're really nearing the inflection point on these.
Agree.
Open question to all of our speakers. You're giving me examples from South Korea, you give me examples from Japan. Looking from east to west, do you see Europe falling behind the curve in fostering innovation and in terms of regulatory trends? In other words, is European regulation too hostile for this new industry, this new environment that is currently developing?
Go ahead, and then I go.
I'll be very quick. I'm not an expert on regulation, but what I can say is we're seeing very different approaches to regulation. Like clearly Europe has been, all about, well, it's always about regulation. And we provided a framework quite early on, but it is quite cumbersome. And all of the fragmentation of Europe and getting your MiCA in some country and passporting it and everything does create some form of asymmetry in the various regulatory frameworks that companies get. I feel that in APAC it's more about sandbox environment and then getting those to scale. And so it's easy to get into the sandbox stuff, but harder to scale. That's the feeling I'm getting. And then in the US, they look at how Europe approaches regulation and then are 10 times more efficient at bringing things to life and injecting capital, which is exactly where Europe completely lags behind. I mean, European capital markets and European ability to provide capital is clearly not there.
Yeah, I mean, Europe is highly respected within the industry, for bringing out a lot of the regulation framework for us to kind of think about how we can regulate these currencies around the world. But I think the big difference is really not coming from the regulator, but the market itself, comparing Europe to Asia, Europe to US, where especially in Asia, the consumer market, consumer apps are moving so fast with such a different iteration, innovating with the market demand, and most of the trading volume and the usage, the actual users of Web3 are based in Asia, and that pushes the regulators to think about in a much faster manner. Whereas in Europe, it's been mostly more on the kind of tokenized funds, institutionals, banks, which is very different, already conservative demographic that's thinking about adoption. So they're really starting at different points of pressure. Not so much, these regulators are better than these. Yeah.
We have just under 3 minutes left, so I'm going to ask you to each give me a prediction of where you see this market moving over the next 5 to 10 years. Tatsuya, let's start with you.
All right, so from the US, there is a new generation for the crypto and the Web3 areas, and Japan is overall the US situation and the European situations just for it. Now we expect there are more easy to use new technology for the end users and expand so fast, especially so programmable monies. It's a huge potential for the e-commerce and other industries, I think.
Amber, your prediction?
Capital markets on chain. Keep it short.
Definitely a huge market. Beck?
Yeah, I see a lot of the parents here. I believe the first asset that your kid will own is probably going to be crypto assets in their wallet. That is not through the blockchain apps. So should be be prepared, and I think guys should ride the wave together.
I'll probably divide this question in two. One from the gaming where I come from, and my prediction in the next 5 years is that Epic Game, Fortnite kind of things, and Roblox platform, we start adopting half decentralized stablecoin, because now they see utility of it with all the gamers around and the regulation around, which means that we're going to see the adoption of 1 billion people through the traditional platforms that are going to embed that, in a very smooth way. The second part from the prediction is that the digital identity, where, for example, we're working with the UK government to kind of put it in a smooth way. And this is where, like, the prediction in terms of the, everything that we're talking about, from financial capitals and everything, but identity overall will be rolled out easily. And if the UK start, I think the rest of Europe will kind of follow. And then we're going to have a wallet with all different identities and everything that you have on chain.
Well, thank you very much. I'm afraid that's all the time we have today, but I'd like to thank you for a very, very interesting panel.
Thank you
so much.
Thank you.